You asked for it, so here it is. The only video about taxes in Germany you need to prepare yourself for 2025, which is urgently needed because this guy thinks you pay 48% income tax, which is twice as much as you really pay with 100k income. So let's see how much taxes you really pay in 2025 with your salary, and most importantly, how you can save taxes. The biggest tax myth in Germany, which you've also seen just a moment in the comments, is that we pay 42% income tax, or more even. But that's not true. Let's calculate this with your income, and once we know your exact tax rate, we can see what options we have to pay less taxes. Legally, of course. And when I mean exact tax rate, I mean two things: your average tax rate and your marginal tax rate. Your average tax rate would be the right answer if someone would ask you how much taxes you pay. And this will never ever be 42%. You can see that perfectly in the official tax calculator of our German Ministry of Finance. Your average tax rate in purple starts at 0% and then rises slowly but steadily the more you earn. How is the average tax rate calculated? With your marginal tax rate, which determines how every single euro in itself is taxed. This could be 42% if you earn more than 66,761 euros in 2024. And that's the first good news for 2025, that the 42% income tax bracket will start a lot later at 68,430 euros. That's your marginal tax rate, which you don't pay. You pay your average tax rate. Your marginal tax rate is only important when you want to save taxes, which we'll come to later on. So don't skip any part of this video and watch until the very end. And while we're at it, another good news is that the 0% income tax bracket starts more than 300 euros later next year. So every single one of you guys watching can earn more than 12,000 euro next year without paying a single cent in taxes. And because of that 12k tax-free earnings, both your tax rates are zero if you would earn 10,000 euro gross salary. So far, so easy. If you earn 20k, your marginal income tax rate, the blue line from the chart earlier, is 25%. But remember, you pay your average tax rate and not your marginal tax rate. And that's why you will pay only 2.75% taxes this year, going down to 2.59% in 2025. If you earn 30k, we have the first big of two bumps in taxes, because your tax rate will triple to a little over 8%. The second bump is even bigger, because it will be a 10% increase. But we'll come to that later on. Between 40k gross salary and 50k is where it gets interesting. Why? Because right in the middle is the average German salary according to the German public pension. And if we type that 45,358 euro into the tax calculator, we get the result of a 13.14% income tax rate. Now, can any one of you guys tell me why Germany is considered a high-tax country if the average worker pays a 13% income tax? You can see in this OECD chart that our tax rate is only slightly above the OECD average with 2 percentage points. What's far worse is our social security contributions: health insurance, care insurance, unemployment insurance, and public pension. And if you want to know how much you will pay for that in 2025, you can watch this video. With 60, 70, and 80k gross salary, your average income tax rate slowly but steadily creeps up to 20%, which starts to hurt. Nothing compared to the really big salaries we come to now, but it starts to hurt. And what hurts even more is that our social security contributions increase accordingly. The good news is that if you earn more than 73,800 euro next year, you can exit the public health insurance and join the private health insurance. This video shows you exactly how that goes. And if you're in TK health insurance right now, oh boy, this one will rise big time in 2025 because they double their additional contribution. So if you want to use that opportunity to find a better health insurance and you would like our help with that, you can book a free meeting with us on perfnex.de/meeting. Between 80k and 90k gross salary, you can see a slightly bigger bump than before, with a really big bump coming right after. But where's this big bump coming from? In 2021, the government eliminated the solidarity tax, Solidaritätszuschlag in German, for about 90% of taxpayers. But if you earn about 85k next year, you will still pay a tiny little bit of solidarity tax. Now look at the tax difference between 100k gross salary and 200k gross salary. Holy Did anyone pay attention to the tax chart early on and can tell me where this massive 10% difference is coming from? Well, between 100k and 200k, your marginal income tax rate will be 42%. And that's why your average income tax rate is rising massively as well. But let me come back to my statement from earlier that no one of you is paying 42% taxes. Even with €500,000 salary, you pay 41.85% taxes only next year. Don't confuse your average with your marginal income tax rate. Your marginal 42% income tax rate is only important when talking about saving taxes, which we'll come to now. Before you make any big mistake and waste a lot of money, let me clear another big myth for you. Because in meetings, a lot of you guys ask us if you should spend money on some random things simply because they are tax deductible. And the clear answer is no. You shouldn't do anything only for the reason of saving taxes. Why? Because your marginal income tax rate is 42%. And that means that you still have to pay 58%, 100% minus 42%, out of your own pocket. So it's great if you get a 42% tax benefit on something meaningful, but it doesn't make any sense to waste 58% on something stupid. The first meaningful is that you should file your taxes. That will give you an average 1,063 for a tiny little bit of work. And by the way, we're still thinking about declaring the entire month of February as tax month here in Germany, publishing only tax videos the entire month, so you get a lot more than this 1,063 euros. Let me know in the comments if you think this is a good idea. But before this year is over, there are still a couple of days left, so you want to do as many of the top 11 money moves as possible. With this video, you will increase your tax return by tens of thousands of euros. You're welcome. The second biggest tax benefit will be undoubtedly ETFs and base pensions level 1. If you invest in ETFs with a mobile broker, how much tax benefits do you get? 0. You get €1,000 tax-free capital gains each year, but that's it. If you invest in ETFs in a base pension level 1, how much tax benefit do you get then? Up to 27,566 euros in 2024, and probably a lot more next year. And of course, you don't just get €1,000 tax-free capital gains as in the broker. In the pension, your ETFs grow completely tax-free until you withdraw in retirement. Meaning, you get another tens of thousands or even hundreds of thousands of euros tax benefits right there. And the last and biggest tax benefit comes from investing in real estate. There's only one condition. You cannot live in the property yourself. You have to rent it out to other people. Buying a property and living in it yourself gives you almost no tax benefits. Buying a property and renting it out gives you all the tax benefits. You can deduct the closing costs, the interest you pay the bank, renovations, insurance, basically all the costs you have, meaning you get a massive tax return when you own rental properties. And if you wonder if it's the right time to buy a property right now, you can watch this video. And if we can help you with anything that you heard here in this video, then let us know by booking a free meeting with us on perfnex.de/meeting. The only thing we cannot help you with is filing your taxes because we are no tax advisor. I thank you for watching, and I see you in the next one with the last video in 2024. It's a banger.